Greetings. Today you will learn about the 3 craziest financial decisions that Warren Buffett, the greatest investor of all time, made that resulted in his incredible wealth. The transactions that turned him into a billionaire legend. These transactions are crucial to understand if one wants to comprehend Buffett's investment approaches. Even if you've watched a few videos or read a few books about Buffett before, I think you might still be surprised. For instance, his roughly $36 billion investment in Apple isn't even mentioned on this list. This is wisdom to wealth, providing you with the best advice and resources for investing in the stock market so that you can achieve financial independence. Let's clarify the criteria used to rank these items before revealing the third place. I will present investments with both positive and negative results to avoid the bias of hindsight. What counts is the level of commitment Warren Buffett was willing to make to a particular investment at the time of purchase. A $10 million deal made when Buffett's worth was just $100 million will therefore be given a higher ranking than a $20 million deal made when he was worth $500 million. See's Candy is ranked third. Premium chocolate candies were and are sold by See's Candies. Through blue chip stamps, Buffett acquired 99% of the business between 1972 and 1973. Contrary to what many other sources have stated, the final cost was $34.7 million, as stated in Blue Chip Stamps' 1973 10K report. But Buffett did pay $25 million for the first 67% of the company, and the story behind it is intriguing. The See's family wanted $30 million for the company, and Charlie rightly said it was worth that much. However, even at $25 million, Buffett wasn't particularly excited and didn't want to pay that much. Buffett gulped at a price that was 3 times net tangible assets. His misguided caution might have derailed a great deal. Fortunately, the sellers accepted Buffett's $25 million offer. Since there are so many indirect purchases made through an increased ownership of blue chip stamps over the years, determining the percentage of Buffett's net worth that was invested in this business requires a lot of assumptions. By the time he made his first purchase in 1972, Buffett only owned a 19% stake in blue chip. However, this amount later rose to 46%. See's was undeniably becoming more valuable at the same time due to its soaring revenues and profits. However, according to my estimation, the initial direct purchases accounted for roughly 18% of his net worth, and the subsequent indirect purchases totaled 26%, for a total of 44%. A 17.5 PE, which was unusually high for Buffett, was paid for See's. However, it was fortunate that he paid attention to Charlie Munger, because over the years, this company has brought Berkshire about $2.3 billion in pre-tax profits. The significance of this investment is enormous, according to Buffett, who noted that See's has given birth to multiple new streams of cash for us, just like Adam and Eve kick-started an activity that led to 6 billion humans. Even more crucially, Buffett's eyes were opened to quality companies by See's, whereas he had previously only been interested in deals. Buffett always said, "It is better to own a wonderful company at a fair price than a fair company at a wonderful price." Second on the list, blue chip postage stamps. As you are already aware, Buffett and Charlie Munger used blue chip as a vehicle for investment to acquire other companies. The business of trading stamps served as a promotional giveaway. Customers were given stamps to put in small booklets to collect each time they made a purchase in a retail establishment. They could exchange their collected stamps for blue chip merchandise. Retailers paid blue chip for the stamps and added the appropriate markup to their products. However, it often took some time before the stamps were used, and some customers either lost or completely forgot about their stamps. This meant that blue chip had a sizable amount of cash on hand to invest while it waited for customers to redeem. In this way, the company brought up the topic of insurance frequently. According to Buffett, approximately 60 billion of our stamps were licked in 1970 and taken to blue chip redemption centers to be pasted into books. Buffett's catalog of rewards was 116 pages long and filled with mouth-watering goods. When Buffett learned that some mortuaries and brothels also provided their customers with stamps, he thought he had finally found a sure thing. A total purchase price for blue chip is difficult to determine because Buffett purchased shares for Berkshire Hathaway, BPL, Diversified Retailing, and himself. Additionally, blue chip began purchasing other worthwhile companies. Here's the last one. This is Buffett's most significant investment, BH Berkshire. Early in the 1960s, Berkshire Hathaway was a textile manufacturer working in a competitive sector, but it had valuable assets. Through BPL, Buffett began to acquire the business in 1962, with the initial intention of returning his ownership to the company's management. Buffett provided the following explanation in his 2014 annual letter to Berkshire shareholders. On May 6, 1964, Berkshire Hathaway, then led by a man by the name of Seabury Stanton, sent a letter to its shareholders offering to buy 225,000 shares of its stock for $11.375 each share. Buffett anticipated receiving the letter, but was taken aback by the cost. Given that this was the deal that Buffett and Seabury had previously agreed upon, Buffett had anticipated receiving an offer of $11.50 per share. Instead of accepting the new offer, he decided to sell his share of the company for 1% less than the original price. Buffett became irate. Now he was going to take over the company, so he kept purchasing shares. Later, he admitted that this was a mistake. Out of the 1,017,547 shares that were then outstanding, BPL owned 392,633 by April 1965. At the board meeting in early May, we formally assumed control of the business. Through Seabury's and Buffett's immature conduct, he lost his job and was left with more than 25% of BPL's capital invested in a terrible venture that he knew nothing about. BPL eventually owned 70% of the business. However, Buffett came up with a strategy in the typical Buffett and Munger, scrambling out of mistakes style. As long as the company shifted its cash flows away from the failing textile business and toward new great businesses, Berkshire could generate high returns on capital. This prompted a string of acquisitions, beginning in 1967 with National Indemnity. Between 1962 and 1973, Buffett purchased shares of Berkshire for Diversified Retailing, BPL, and himself. Actually, the buying didn't stop until 1977, but like blue chip stamps, Berkshire's individual holdings at one point were worth more than the total cost of the company. The cost of the shares that were attributed to the main business was $18 million. This was estimated to represent an additional 52% of Buffett's total net worth at the time. Similar to blue chip stamps, Berkshire's main line of business eventually went out of business. Buffett made the decision to stop all remaining textile operations in 1985. Let's run some calculations, though. A single Berkshire share cost $15 back in 1965. Today, the price exceeds $300,000. This is roughly a 10,000 bagger, even though you would have experienced some dilution if you had owned the stock since 1965. I'm not sure if any other stocks exist that could be compared. And that's it. The 3 most significant investments made by the legendary Warren Buffett. Make sure to tap the subscribe button if you want to receive more excellent and noteworthy investment advice from wisdom to wealth that will be coming out in the near future.